Hey everybody, this is Jim at SP500chart.com. It's about 4:30 on July 31st, 2014. My voice is rotten again, so bear with me. Please read this. Pause your video right now rather than strain my voice by reading this to you. Just pause the video, read it, because it's true. Okay, now let's look at the chart. Oh, today we had some significant ugliness. We haven't seen ugliness like this in a good while. And typically, the kind of ugliness we've been accustomed to over the past 6 to 8 months has been a little bit of a slow burn variety, where we maybe lose a fraction of a percent for 3 or 4 days running, and it ends up being about a 2% loss. Well, today we got roughly a 2% loss in one day, and it's been a while. What I want to do to start with is, and we'll talk about this little pattern here, which revealed its true intentions today. But what I want to talk about first is, look at all these little green arrows. These are spots that mark the bottoms after significant periods of weakness over the last, about last 18 months. So you can see, if you just kind of look at how these things are spaced out, we've been due. Okay? And as much as I would like to think that we were just going to plow on up over 2,000, at this point I've got to back off from that and say, not so fast. I'm not willing to say that will not happen. But what I think we have to realistically do is say, this market got overextended. We are now in something of a pullback mode. So, here's the spacing over the past 18, 19 months. We've had one, and I'm not even including this one back here, but we've had 1, 2, 3, 4, 5, 6, 7, 8, and now 9 sell-offs where it definitely felt like a sell-off. And here we are again, doing it again. So, I've also cleaned up this chart a little bit, so there's not quite as many things on it. And, we were looking at this pattern right here. I believe now I'm pretty comfortable in saying this was a head fake. This was a false breakout above this resistance line, and it never got even a third of the way there as far as being technically significant. So that was just a head fake. So what do we do to measure our downside target? Well, we go to the first reactive move from the lower line to the resistance line. Here it is. We add that on to the spot where we broke down, and we end up with a target that is, and by the way, this line I think should be more like that. Okay? Don't get excited that we stopped right on that line. I don't think we did. We'll double check, but I don't think that's the case. As a matter of fact, I think we go there. So, you can see that the minimum downside target from this consolidation area up here is about 1928, 1929, something around there. We are really close to that right now. So let's back out now. How far do I have to back out before we get this line? Okay, now I'm going to draw this line again, and I'm going to be extremely careful to make sure we go on this low. And then we got it lined up with that low, and you can see that if we draw this line absolutely extremely carefully, indeed, and it's moved again. That's where it goes. So we briefly got underneath this line, did a little back test on it, and then started to sell off again after an initial very small bounce on this line. Not worth mentioning, however. So as we look at the chart now, we're in a position to where we say, as we often do, if there's a line underneath us, that is a possible area where one might expect some support. If there's a line above us, that is a line where one would expect resistance. So this would be resistance, this would be resistance, whereas coming into today, this line was looking like it could still be support, and this line was looking like support. So remember I mentioned in yesterday's notes that these lines are not impervious. They're just bumps or they're barriers. And depending upon how much pressure there is to be brought to bear on these barriers, they can break down. And today we saw one and likely two of them break down. I say likely to because just as we were not technically significantly above this line for that false move to the upside, even though we're further underneath this line, we will not be technically significantly under this line until we're around, until we're in the 1920s. So there's an outside chance that that something of some strength tomorrow could get us back over this line, but I certainly don't think that is an idea worthy of making plans on. Instead, I would look to this neckline of our inverted head and shoulders pattern, which is at about 1904, 1905. I would look to, let's call it 1900. I would look to 1900 to provide likely support, or this rising trend line right here. Now, I am now going to change the color of this channel to kind of a pink. And I'm going to change this line to a bolder red. And the line that is its partner in crime, I'm going to make it a bolder red as well. So as we back out, and you know, I'm going to get rid of this line. We don't need that anymore. I'll leave that. I'll leave this. I'll leave everything else. So now, as we look at this chart, the lines that I want to really stand out are this lower support line and this upper resistance line. And I'm going to do two versions of this line. Okay? Because now I think we can rightly say that 1990 was a top. Long-term top? Maybe, maybe not. Short-term top? Absolutely. Intermediate top? Probably. If we're talking in terms of months, not weeks, yeah, it's probably an intermediate top that we would not be challenging this again for maybe a couple of months, maybe in the fall at this point. But what I want to do is, we have this line that is almost parallel to this, not quite. But what I want to do is make a second upper trend line, resistance line, that's got a little bit different look to it. We're going to start back here, right at the same time that we started this one. The difference is I am going to make, instead of going with this top, this, and then an inability to get up to that level for the past 6 months, I am going to start with this top, go with this top here in late December, and then the top that we just had. These are spaced out pretty nicely. And with this in mind, let's make this a little bit lighter color too. I know this is getting a little involved, but here and here, I think these are two lines that that I feel pretty good about being long-term resistance and long-term support. It's been a while since we've come down to this line right here, and just judging from what I saw today and the fact that we are also really in the process, it appears, of taking out this support line, it just looks sort of right to my eye that here, probably not tomorrow, but maybe next week, maybe 2 weeks from now, it just looks kind of right to my eye that at some point we tag this lower line, this lower red line right here. So guys, we're almost down to that minimum target area. And by the way, this little teal line, if you'll remember, this is the 40% retracement line from the bottom of the right shoulder in our inverted head and shoulders pattern, and the end of the breakout move, which was right here. So we haven't tagged that either. That's another somewhat esoteric place where we might get picked up, but it's nothing that I would say, yes, I think we're going to get strong support there. I don't think so, but it's still worth keeping in mind, because that 40% retracement area is an area where chart technicians over the years have seen support kick in at that level. Finally, just one other thing to note. If you look at where our minimum target is from this this downside breakout, you'll see that it lines up. Excuse me, God, that was a half sneeze. Hold on a second. that almost sounded like I had Tourette's. God, I felt the sneeze coming on, and I was going to go chew, but all I got was the with no chew. So anyway, what I was saying is this level right here, which is at roughly 1928 or so, lines up almost exactly with this little low we put back in the second week of June. Just coincidence? Significant? Maybe, maybe not. But we bounced here before. Maybe we get a little bounce there again. But I would rather look to this red line now as a likely area of support. So what a rotten day. I mean, really, we almost made that minimum target within the same day that we saw this line break. But if nothing else, we can look at this chart, and you can make note of the fact that yes, this line right here was important, because when it broke, it literally broke. I mean, it gave up almost 2% in what is probably the worst single day we've had in quite a while. We've had a few days where we would gain a good bit and then give it back. I think back here in May we had a day where there was a large swing, but from top to bottom, or I don't know whether it was May or not, but there was a day where we had a good 1.5% or so swing from the high to the low. But here we just had a break of this line. So now we look for a couple things. One of them is, if you're patient and if you don't freak out, I think we get a back test. I think at some point we come back and we retry this line. It may take a little while. It may take some patience, but that is a very likely thing to be looking for in the days and weeks ahead, is a rally back to this line to test that line as resistance, and more than likely it will be. So guys, thanks for watching the video. Wish I could have said I saw this coming, but I didn't. And but we did see the lines on the chart. It just this was just a swift move that was probably fairly hard to get out of the way of. So anyway, let's see where we find bottom. Let's see where we pick up support, and hopefully from that point, you guys can, depending on what your objectives are and what your risk tolerance is, make the appropriate decision for you. Thanks for watching. Take care.